Oh, there he is.
Mm-hmm. Now that Daddy's not working on, not working on stuff on his lap, I give him attention.
Yeah, there
Give
you
him
go.
loans. Here you go, buddy.
All right, so picking up where we left off, things haven't really gotten much better. In fact, depending on what side you're on, they've gotten precipitously worse. There's strong evidence that Iran has at least one nuke now. And Trump's basically
That's what the
had,
word is. Yeah.
yeah, Trump,
Yeah.
I've heard that from numerous sources. Very strong evidence that they do. What's interesting is they most certainly did not, by 18, I believe, intelligence agencies, they certainly did not have one before all this. So, you know,
Right. But it makes sense, right? Like, I mean, just look at the incentives.
sure,
Yeah.
sure. I mean,
It's like they weren't
Gaddafi,
making one. Like the one dude that held that back, right, was the guy that they assassinated.
yeah.
So when he's dead and then his son
It's like,
takes over in
well, look
that
at,
same attack, killed his wife and his kids and everything
yeah,
else, like, and plus all those people, like it was actually, I have a friend that, actually two friends that live in Iran. They were actually of the mind before this war, like, hey, we need to, like they hated the regime. They
right.
hated the IRGC, all of that. And they were like, we need to make peace with the Americans. We need these sanctions lifted. This is stupid. But
And
then
then
after
all that stuff happens. They're
they
like, oh,
they flipped, man.
no, no,
Once the bombs start, yeah, they
I'm
flipped
aware
fast.
of like even LGBT accounts, if you can imagine that in Iran, F the regime, this and that, and now they're like posting with the flag, like, yeah, like
Yep,
so.
exactly.
Talk about backfiring.
Yeah, that's the ultimate form of blowback when you think about it. Now, here's the thing, and this is why here this is the tricky part. Like, you know, Trump, like that's one of the worst things that could be for Trump. Like, not only has this not really worked out well for the Trump administration overall, but imagine if they say, okay, well, we're going to test one, and they give a date and they test it, then it's confirmed. And it's like, whoa, dude, the whole reason why you did this is so this wouldn't
Right,
happen,
right.
right? So the economy gets screwed and they get one anyway. In fact,
Hmm.
they get one largely because you didn't give them much of a choice,
Sure, sure.
lately.
Well, and not
So,
only that, look at historically, countries who did not or either didn't have them or gave them up. Look at the way that it worked out for them.
look at Ukraine.
Libya, Syria, Iraq. And then conversely, you see that the ones that did get their hands on one, Pakistan, North Korea, it's kind of like, okay, we'll leave you guys alone. You know,
Well, look at Ukraine. Ukraine gave theirs up. Do you
whoops.
think if Ukraine had nukes that Putin would ever invade it? I doubt it.
Right.
Putin's way too cautious.
Hmm.
So I wish that weren't the case. I like to be fair to now look, who was the country that took all of those guys out or had trouble with those guys? The North Koreans, the Iranians, who was the one giving a shit about nukes? It was the United States.
Always.
So you see what I'm saying? So it's like what it does it is slightly upsetting that, like, it's like the boy who cried wolf thing. But by doing that and being sort of hyper vigilant, or perhaps even using it as an excuse, like we
Hmm.
did in Iraq, like that's just a fact, right? You're actually incentivizing people now to nuclearize.
Well, correct.
Like, so
What kind of
that's the worst
message?
thing you could do,
What kind of message
right?
does that send to the rest of the world? Yeah.
I have a friend in Japan that I told you about. He's telling me that there's a lot of talk now with the new political regimes that are going forward.
Hmm.
Japan wants to nuclearize,
Can't blame him.
and they have enough engineers and they have the industrial base,
Well,
scientific
if
industrial bases to
anybody
do
could
it.
pull it
So
off.
anybody, all right. So
Yeah.
there you go. I
Yeah.
mean, yeah, it's likely
So
we're going to see spillover from this. We're going to see a lot of nuclearized countries in the next decade.
Correct.
That's
So,
just yeah.
that kind of feeds our long-standing principle of, investment in infrastructure here. By here, I mean,
Hmm.
the Western Hemisphere. So I believe that kind of starts to feed into this chart here.
Right. Now, this is basically the reason why I wanted to show this specific logistics map is because it shows both the pipelines and the sea routes for that are affiliated with some of the stock picks that we've been talking about, but some new ones. Because look at the traffic to the Gulf of Mexico right there.
Hmm.
But further, what you see when you look at tracking data, you're seeing a bunch of these small Aframax tankers uh, go over to what do they call it? British Columbia,
Okay.
the west side of Canada in the
Right.
Pacific, and they're just feeding into South Korea, China, and Japan. In fact, South Korea just signed, I believe, a 5 or 10 year contract deal with both CNQ and CVE and the Canadian government,
Hmm.
paying up front for crude oil for what do they call it? A West Canadian Select, I believe, is the term for Albertan oil.
Right.
So that's bullish for the stuff that we covered last time: the Suncors, the CVEs, the Canadian Natural Resources.
Which,
They,
if I may add, have pivoted off of at least the places where I entered. We'll
yep,
cover that later. So
yeah,
that's
we
a
got
good
in
sign.
right at the right time for that. Really, that
Yeah,
was
yeah, and I
perfect.
mean
That
it.
Friday was perfect.
Correct,
Yeah.
correct. It may retrace a little further. We may be seeing some kind of technical, further retracement, but I'm still happy with where I got in, and I'm a
Now look,
buyer.
I will say, I don't want to feel too like get too cocky or anything like that. But on Friday, I was able to get 10 shares of CVE at like 27.50, and I got them.
All
Like I
right.
was like, so when that happened, I was like, that's got to be kind of luck, though, right? To a degree,
You're
like
not going to get every trade isn't going to be like that. But
yeah,
the more picky you are with your prices, the more you do accumulate things like that. You just have to be
yeah,
comfortable with things leaving you, right? So if it's off to the
right,
races and it leaves you behind, you just got to be like, it happens.
right.
However, I do think, do we have anything more to discuss with this chart?
Uh, just overall, the beauty of this chart is look at the pipeline access. Not okay. So first of all, what we're seeing is an increase in tankers to the Gulf,
Hmm.
and you see where those pipelines go from Alberta to where? Right to the Gulf.
Right.
You see that they hit refineries along the way too.
Sure, sure. There's
So all of
kind of,
that
yep.
That Western Texas Select or whatever can go down. It can pour off to the Pacific over there, and it can pour down all the way down to be exported through the Gulf of Mexico. And the companies that we've spoken about already, they actually have assets in the Gulf of Mexico by which they can do that. So it's a really great setup, and they're looking at adding new pipeline infrastructure, in the next 2 years, year. In fact,
Wow.
there are two projects that should be done by the end of the year, if I'm not mistaken.
Wow.
So,
Okay, so if you haven't been able to get a good price, you may have a good price soon, and here's why. Blackstone, which incidentally is not related to BlackRock, which you may have heard of, though they do have the same origin, by the way. They just split off at like 1988 or something like that. Um, has capped withdrawals from its $79 billion Blackstone private credit (BCRED) fund at 5% of shares after investor redemption requests surged to 10% in Q2 of 2026. So, in other words, they're foreseeing a run on their, and this is like their flagship big boy fund. So, they're seeing a run on that and they're capping it. Now, I don't mean to. So, if you're new to this and you're wondering what that means, if you invest something and you're seeing hard times ahead, you might say, I'm going to pull that, hold on to the cash, maybe put it in other things, just be ready. And so when multiple people, especially in the investment class, start saying that and start feeling that way and start to pull their money out, it's probably an indication that there's some dark times ahead. Um, so the last time we saw that, I believe, was in 2012. We had kind of like a mini recession. There was 2007, 2008, right? We all remember what happened back then, and of course, .com. This type of
Mm-hmm.
thing for larger wealth management firms is always a harbinger of a pretty strong retracement, and we're seeing it again. We'll actually get into looking at the S&P and how closely it overlaps with historically with what we saw in 2007 and 2001 specifically. So basically, we're due. So again, even if now, granted, our selections have been kind of catered to be resistant to this in many more reasons than one. There's not only the geopolitical situation. I can actually move on to some of our because that's pretty much all I wanted to say about that. We have some new selections
Well,
as
I
well as
wanted
the
to,
old ones.
yeah, I wanted to actually ask about that. So this is something I've been watching for a while. If they're capping withdrawals, okay, that tells me two things. There are people in the know that see storm clouds ahead. Number one, because they're withdrawing. Okay. Number two, the fact that they're capping withdrawals tells me that they don't actually have the assets.
And that's sure that is perfectly. I will try to prepare this for the next podcast, but the back in when the fractional reserve lending was first kind of devised, I believe it was J.P. Morgan himself that even he said that you should never go higher than like a 12 to 1 leverage. What that
Right.
means is that, if I have $1, I should never be able to loan $13 on that $1, right? Cap it at
Mm-hmm.
12, right? Now, even some of the most conservative banks is 60 to 1 leverage. 60, right? So, you're right in that, yes, if there's a run on the banks, you're going to see the emperor with his clothes off, right? So
Mm-hmm.
that was, if you recall, that was one of the reasons why they wanted to get off the gold standard, or why they said that. Oh, you run on bank runs. It's like, okay, so we just tell you can't get your money because we don't have it anyway. Joke's on you.
Mm-hmm. Well, it's it's more like a fractional reserve Ponzi in that sense because
It's really just a
you're
fancy term
layering
for a
debt,
Ponzi scheme,
right? You're
right?
layering debt on top of credit on top of more debt. You
Yeah,
know what I
correct,
mean?
correct.
So it's the whole system is basically a whole bunch of IOUs built upon IOUs
It's
anyway.
IOUs built upon
So
IOUs, and blessed be the day when you get some new dummy to come in and put their money because then you can hand it out to five other people, right?
right,
And
and a little public service announcement here. If you say, "Oh, Blackstone, BlackRock, or what's that Bitcoin guy?" Um,
Michael
God,
Saylor, Michael
Michael
Saylor,
Saylor, yeah,
yeah,
that con man.
yeah,
You
he's a
know,
douchebag.
yeah, he's coming out with this thing that's like it's supposed to be a Bitcoin linked thing, and he offers like 13% like every month or something growth, and I'm like, whoa. I'm like, so you're guaranteeing 13%, and he's saying it's specifically for retail investors.
Right.
Time out. If someone's telling you you get like a monthly or a weekly or anything that's just a baseline of 13%, I'm telling you that is too good to be true.
Sure.
That you're gonna that's a scam right there. That's one way to find out. Like it's just I'm sorry, like there are arbitrages that can be made in specific time intervals,
Mhm.
but not an indefinite 13% return on anything. It's just
Correct.
not how it works. Yeah,
Yeah,
it's
I mean,
because you know how compounding works. That's impossible.
even
That'd be
exactly,
exponential.
even a yearly return of 13% is questionable. Like the S&P on
Right,
its best years is like 15, 17%, right? So if
right.
you're promising the best, if you're promising to do better than the stock market at its absolute best, it's cause for concern, right? It's just
Mm-hmm.
Just something you might want to look into. Um,
Right.
so given that, before we get to these picks, let's take a look at what the S&P is doing. I already have.
Yeah, it
Okay,
was down today.
it was, sorry about the mess here. Let's, when in doubt, zoom in. So we did, let's just put things in perspective. This is down, and yes, this is a down day. I have been calling for something like this for like over a month, because this
Hmm.
is the type of thing you would need to see in a healthy market. If you look, and I just kind of roll back, it's pretty much, we had a little bit of a correction here, but basically, since April, the beginning of April, so for 2 solid months, we've been off to the races without any sort of significant retracement, which is pretty. It's just telling you when it does happen, it's you would rather it be something gradual, like maybe something like this, than to get caught with your pants down and have like a meltdown, right? This is not a
Right.
meltdown. What this tells me, you do have sustained selling, blasting through multiple levels here. And typically those are risk management. The risk management algorithms that the banks uses, it's all pretty much the same thing. In a perfect world, you would not want that, because what it amounts to is panic selling and cascades, right? Which is kind of what we see here. It could be worse. It has been worse, but to me, this is not a anything cause for concern. However, if we compare these, let's go to SPY, which is the ETF on. Let's just look like really long term. Like let's do like a month, and I have some previous analysis here, but what am I looking for? Okay, so 1990. So what I'm looking for is these. You see these hyperbolic growth things here, and guess what? We're looking at the peak here, looking in, and guess what that was? 2000, right? Where my cursor is. You see the date on the bottom, right?
Hmm.
Move to the other peak. Oh, guess what? That's
2007.
2007. Starting to build a pattern here. Right now, if we zoom out, look at just look at the comparison, right? So we
Yep.
have this guy. This is bad enough. This guy, 2007. We didn't even have that. Looks like for COVID. COVID was actually paltry with respect to these two, right? But look at
Hmm.
what we have here, right? So we, this based on these, right? So if I do my Fibonacci's here, I don't just want to like talk magic, right? We have a 382 retracement is very bad, right? That's a very bad day. That's a very bad situation. So if I had that on the, and I'm not saying that this is going to happen. I'm just saying if I draw this, let's even be conservative, right? Let's just say the most recent run from 2023. That's about right because I believe we had a mini recession, right around the COVID time. So let's just say we started off with a clean slate. I mean that could put us, a 382 retracement, from 760 to 512. If we look at what that translates to in the S&P, let's sorry, I have analysis here. Let me go to, come on. No, you're not going to cooperate? Okay. Let's try just a different chart. Go away. Sorry, technical difficulties. um, okay, so if we go back and where was I? So we were 2022 up until now. Let's just assume that that's the top. We're at seven six, pushing 7,700, right? That could take us all the way back to 5,001. Low 5,000s, right? That I would say that that's the worst it could get based on historical what we've seen historically. And by that I specifically mean 2001, 2008, COVID, is the worst it's going to get is 5,000. But we could easily see 6,000. I actually contend that a sell off to 6,000 would be broadly healthy for the market, like in the big picture, right? We don't, obviously our portfolios hate to see, short term pain, long term gain. I hate that saying, but it's actually true here. Like if we wanted to see a good kind of like rollout, of a lot of toxic debt, have some people take profits and let the markets kind of start over again, like renormalized. That's a fair level, right? So the reason why I bring this up is because of that whole Blackstone thing. If you're on the fence, or you are adding to positions, or you don't have a or living paycheck to paycheck, it's hard to set aside $10 a month. That's okay, because again, I think you're still early. I think that we could see, and again, I'm not being a. This is just a perfectly technical, historical analysis going back, multiple decades, that says that you could have a really good entry position. So when the stocks sell off, I don't panic. I actually have the opposite mindset. It's like, hooray, it's on discount, right? All these stocks that I've been kind of like hemming and hawing, like, that's too expensive. I could get it at a discount. I would love,
Exactly.
I would love to get Exxon at, I checked. I actually got it at $32, not 26. Sorry, fact check
Still,
myself. Still,
32, 32
right.
is that's brilliant. That's a
Exactly. So if I could get something like Exxon at 50, and any of our other picks, which we're about to get into here in a second, it's say like like a 25% discount, something like that, I'm happy, right? Because again, this is something that I'm building for the long term. And again, optimally with dividend earners, right? So if you accumulate, say, 100K over the course of a lifetime in capital with a stock that pays 5% dividends, I mean, that's a huge supplement to your income,
right.
and it doesn't have to be done overnight. This is really the crux of my kind of investment style, is you just wait for discounts.
Well, not just that, Danny, but I think it's better. Like, look, I'm going to be honest. Overall, it's better, in my opinion, to accumulate than to ever buy in large tranches anyway.
Correct.
Because when you buy in large tranches, you miss the subtlety of the discount and the opportunity cost, and you see what I'm saying. And then you have to worry
Absolutely.
about taxes. You have to worry about capital gain, all that
Sure,
stuff.
sure, absolutely. And
Right.
if you remember at the conclusion of the last podcast, we did a little segment on the benefits, and it doesn't sound this way, but the benefits of trading when you're broke, or investing when you're broke. And the benefit of investing when you're broke is it forces you to really snipe those perfect opportunities, as opposed to just saying, I'll just get it at current prices. If it goes below me, it goes below me, and that's just that. You're guaranteed to at least try your hardest. Of course, it never works out that way perfectly, but your portfolio is always going to reflect higher percentages and profits if you take that time to really snipe out those entry points. So there's four components to risk management, right? Most people understand profit target, stop loss, right? Goes below my level, I sell. I take profits at a certain level, right? But there's the other two components that they don't realize, right? The third component, which I argue is actually the most important, is entry, right? So that is, let's say I buy a stock at $100. I expect it to go to 110. That's a 10% profit. If I wait until it dips to 98.50, well, then I've squeezed out an extra two plus percent out of that, right?
Mm-hmm.
So that's a big deal, especially if you're trading on margin, right? So for those of you who don't know, if you get a futures account, most of us don't have $100,000 to buy, 100 barrels of oil or whatever. And so what we do is we introduce this thing called margin, which just allows us to leverage given a certain investment, and be able to buy more, but you're kind of withholden to a certain spread. So if you go over a certain limit, you have what's called a liquidation, where they say, "Oh, sorry," and they just take everything from you, right? And so that's bad. And so, that's why trading futures is very risky. Trading anything with leverage is risky, obviously, for that reason, right? So you have to be super, super, super careful that you don't get under that limit, which can happen very fast. A Trump turd, a tweet, a market, fart, and you have some volatility, you're done. And the bank doesn't ask questions. They're like, "Oh, sorry." They're not gonna say, "Oh, it was a wick. You're fine." No, it's just you're done. You're done, and it happens instantly.
Mm-hmm.
So that third one is extremely important, and the fourth one is trade management. So these are things that we've accumulated this list. These are things that we've been looking at over time. If what I say does happen, and I do believe that it will, it's just a matter of time. Again, nothing to get alarmist about, but when you have that retracement, that's a time for you to prepare to load up, add to your position. Trade management is about sitting back and saying, okay, what is the market giving me and how am I going to respond to that? Because even if you're underwater, depending on what your risk tolerances are, you could actually come out even better than you did if you had done nothing, right? By, say, adding to a position. We call that averaging down, which can be a bad thing. It can be a bad thing if the sky is falling and you're just like, Bill Ackman was very famous for that. So as long as you have a very healthy mindset and you know exactly what you want, sniping better prices at better levels never hurt anybody. So those are
Right.
those four components.
Yeah, as far as what I've been doing is I've been looking at uh, the core macro of the situation, right? And basically the macro of the situation, the key drivers of those macros, and then the cash flow current and cash flow potential,
Mhm.
right? If you're going to have a high cash flow business, for instance, oil and oil transport, even if the market corrects 50%, right? Those are still going to be
Well,
cash flow businesses,
correct,
right?
correct.
Especially with
Especially,
high dividends.
sure,
I'm still going to buy when they drop. You know what
correct,
I mean?
correct, and
So,
that. So there are multiple factors to take into account when we're creating what we call a risk neutral profile, risk neutral portfolio. So what that means is that the risk incurred by somebody over here should be counterbalanced by the risk incurred by somebody over here. So let's say my portfolio is heavy in tech and finance. Those are basically what I call vapor stocks, right? They're when interest rates are low and we're popping bottles and champagne showers and all that. Those are the types of things.
vaporware.
Vaporware,
Right.
right? I'm not necessarily saying that there's no value in them, but they tend to do better when money is free, as we say, right? Or,
Mm-hmm.
or when there's investment in R&D, or when there's a hype train like AI, right? Whereas, you flip the coin and you have things like durable goods, right? Things, commodities, right? As we were saying, you can't rate hike hydrocarbons, right?
Mm-hmm.
That just doesn't make sense, right? So always, and I actually draw specific attention to what's going on now because this makes things even more auspicious, right? The fact that we have all this Middle East turmoil that is bound to, I mean, it's just an inevitability that it's going to at least, even if things were magicked away, still you would think the Western powers are like, you know what? Let's relieve some of our dependence on this, and that's if things go like best case scenario, right? Which is
Mm-hmm.
as we noted earlier in the beginning of the podcast, kind of isn't working, right? So we have an even larger precedent for things like infrastructure, for things like oil, specifically onshore stuff, specifically Canadian things. We'll get to Petrobras here later, but to that point, we could just review some of our picks from last week, right? So again, the red lines when I got in last Friday, we saw a nice little pivot. Of course, no stock is immune to the vagaries of the markets, right? If the S&P is tanking, it's going to hit you a little bit. That's just it's just what happens, right? But still, great pivot, and this one I'm above water, CNQ, same kind of deal.
Mm-hmm.
MO, I think I did really well on, was underwater just a tiny little bit, and then it kind of
Sorry, what's MO again?
MO is Altria Group. That's the
Altria?
extremely
Yeah. Mm-hmm.
extremely high dividend, 5% that they
Mm-hmm.
do like tobacco type stuff. EPD, that's another one that I called out.
Mm-hmm.
Nice little pivot there. I think I maybe I know I'm calling out I'm deliberately calling out the ones where I'm ahead. It's not 100%. I am underwater on some, and I'm okay with that. The Suncor, I broke even. I don't think I got into. I think that's it. And Petrobras, I entered. We're gonna get to that in a second. Maybe I should. Actually, I think this is a good time to segue into Petrobras because I have quite a bit, as you see here, quite a bit of analysis on them. So why don't you talk a little bit about that? We could start with Petrobras.
Yeah, Petrobras is South American, I believe
Brazilian,
Brazilian,
Brazilian. Yeah.
uh, and they operate the base. It's called like the salt flats. It's offshore,
Hmm.
uh, drilling and pumping largely, and their cost of production is ridiculously low. It's like below $20 a barrel. Like it's if like I mean even if oil were to drop to $30 a barrel, they would
It'd still
still
be in
be making
business.
profit.
Yep.
Right. And they have an extremely high dividend, and their cash flow, especially with Brent and so forth, being upward, floating around 100, and likely to stick there for a long while now. They're just basically printing money with each barrel of oil that they sell off into the market. The only problem is they because uh, they're a part of the Brazilian, they have to deal with the Brazilian government. Their stock tends to remain pretty damn low, which actually isn't necessarily a bad thing, right?
Mhm.
Because what that means is you can get in at low prices and still,
And
with the
soak up
cash
the
flow that they're right,
soak up
exactly.
those dividends. 5.65%. That is that. Remember, my definition of a dividend king is 5 plus. So dividend king
Right,
here.
exactly. So, and they're it's they're an extremely profitable company. Recently, there were some rules that they did, and we'll talk about the Canadian uh, oil sands in a second about this. But they they put some rules in place where there's no more taxes on like diesel, and they put some fuel relief on their people and so forth, and that further depressed the price. But again, as long as Brent sticks around, around even 90, they're
Mhm.
just free cash flow, and it's going to be like that. And if you actually look at the reserves too, it's not like those short-term shale plays in the Permian. Like these are long-term wells that they have, where there's just immense amounts of oil, and the cost of production is just so incredibly low. And not just that, but we talked about pipelines earlier. Uh, they're starting to network South American pipelines and start to get those infrastructure contracts in line as well, of which Petrobras is, one of uh, the primary that are interested in pumping to North America. So
Cool. Yeah, so also technically, so a lot of fundamentals in their favor. Technically, I did want to kind of segue into something called Elliott wave theory. I do talk about this in my course, but basically, the mark Elliott wave theory says the markets move in ebbs and flows, right? We have what we call an impulse wave, where there's some buying, then the pressure gets released, some people take profits. Always happens. You never see monotonic increases, and if you did, that's a problem, right? That could tell you that there's trouble ahead. So what Elliott wave says that we should see are these what we call an impulse wave, of which there are five components. We have this first drive, a little retracement, second drive. This is called the third wave. Fourth wave is another sell off, and then we peak here at wave five. And then after that, you should see this little zigzag here, which is an ABC wave. It's just notation, so we know. There's actually like some people get really, really crazy about this. I just use it for broad strokes, right? Like, is this stock doing something that looks reasonable? And it also helps me understand when I could see a pivot, when a new impulse
high,
wave.
yeah,
Yeah, well, either a high or a new Elliott wave should begin, right? So
right, right.
let's rewind the clock here, and I'm looking at these highs, and I didn't know what's to the right here. I could surmise again based on Elliott wave theory. Okay, we're kind of eking out. I made another high here. This is why this is five and not this one is because I could have put this here. It's broad strokes, right? I made a new high, right? And I I feel just by looking at this, like look at the chart with respect to what came before. We'll get to that. I'll zoom out a little bit. That a correction is due. I cross-reference that with my Fibonacci's, and I get essentially where I enter. Now it's gone a little below that. It happens. It can. But this gives you a pretty good idea of what cycle this particular stock is in. Could this extend? Absolutely. There are things called extended fifths and so forth. There's a lot of little nuances, but this is like a textbook case of what we call a 5-3 Elliott wave. If we zoom out a little bit, I actually have I remembered to zoom out, but I have no idea what I wanted to say. Okay, yeah. If we zoom out a little bit, let's zoom out a little further. Additionally, this is outside of the Elliott wave conversation. Look at how well this level here is respected. The red line is where I bought, right? And so that corresponds to some volatility, but roughly a high here, here, and here. And so if we zoom in, that is relatively where I bought. Now there's some give in that, right? So it could extend down to 1688. I'm still a buyer there. I wouldn't start worrying. We say that the Elliott wave is kind of invalidated, as in it is reverse direction if we break below this 2 here. And I found anecdotally that does hold quite a bit. So that 2 here is 1478. We got quite a bit before that. As long as we're in the 16s, I'm still a buyer. So that was just a little segue into some
Yeah,
technical analysis.
I noticed this pattern from Bitcoin actually.
Bitcoin is
Is
awesome at
that
this.
Yeah, Bitcoin will it'll do the Elliott wave, then it'll chop sideways for a bit,
It'll
and
yeah.
then it'll start another
Mhm.
bull run.
Yeah, we call
That's
that
really general.
an extended correction, an extended where it just
Yeah.
kind of and I've actually noted that here. I've used that term or a sideways correction, you could say.
Now
Um,
here's my question: is what's actually going on in market psychology here?
well,
Like,
that's actually something I was hoping you could answer because
I'd have to think about that.
but
Yeah.
before we do, let me give you the whole story. So what's cool about Elliott wave is that it's fractal in nature. And what I mean by that is you could kind of tell, I have better examples, but you could kind of tell that maybe this guy right here kind of looks like this guy as a whole. You see what I mean? So if I have like a line coming from here going down here, that kind of looks let's get rid of these so you see what I'm trying to get at here. That kind of looks like maybe I'll do a different color. Yeah, it's okay. This leg here. So what's cool is that again, it's trying to establish that these are fractal. So you see them embedded within one another, which is actually really cool. And what it suggests, what I believe, that this is not magic. Okay, it's not just some. These are caused by market psychology, and that these things happen in waves. Okay, so if you have a guy who's a day trader, right, and he's plinking away and he's riding the wave, so to speak, he takes profits. Okay, so you're gonna see that at some level en masse, right? Because people trade in the same ways, they have different, similar trading styles, similar trading algorithms, even, and so you could see it at the very very small level. And if you zoom out, you also have the same types of mentalities at the macro level. So guys like me are looking at this and saying, okay, well, I bought down here and we're up here by this. It's time to take profits, right? And of course, you have the algorithms that are likely doing the same. You have interbank stuff going on. So you have a series of factors which kind of aligns. And again, the two things that I have always seen. Some people don't like this technique. That's fine. We don't have to trade the same way. I like it because I have found on a broad stroke level, it's very very accurate.
The only thing that I can draw a parallel to, at least in medicine, is this definitely mimics dose response curves and how the nervous system behaves to hedonic adaptation.
I could see that.
Uh, for
Yeah.
instance, like I mean, it's kind of maybe twisted, but you can kind of understand it. By dose response curve, I mean imagine somebody drinks alcohol, right? the first time they can get to a certain peak level, right? And then it wears off, but then they're going to need a certain amount to reach another peak level until finally you do finally reach an extinction phase where the system can actually become saturated, right? And then it has to taper down to about halfway again in order to restart to gain any sort of upward momentum again, period. It's just sort of like you can't, for instance, you can't just keep on drinking alcohol and continue to feel euphoric. It's that the nervous
You're gonna
system can't
die.
work like
Yeah.
that. Right. And the reason why that would make sense in markets is because when it's either, investors or sellers or whatever it is, people in markets, right? They want the numbers to go higher to increase the profit, right? Because what? That is a pleasure response. That's how it's, you know what I mean? Number
Sure.
go up and you feel good. So it would make sense that a similar psychology would actually fit within a trading.
100%. Yeah, and that's kind of
Right.
like, in addition to the, just normal profit setting and taking and so forth, there is a psychological component that I would like to think that I understand, but I think that I have a lot more opportunities for collaboration with you to really nail, because if we could time this, that's very powerful. So, anyway, so while we're in the vein of Petrobras, okay, so VLO, we already covered that one. We'll just
I
kind of
know,
check
but
up
I
on it.
wanted it corrected today, right? Which I was sort of freaking out because like DLO's been one of my, better, better buys, better gets, if you will. And I did a lot of research on VLO too. I'll talk why VLO specifically and not any of the other refiners, because the other refiners have some issues like Marathon and so forth that are pretty problematic. But I really like VLO. They have assets in the Gulf that are able to just export all sorts of stuff. They can, process. They have complex refineries. So they can do all sorts of different types of crude and so forth. Um, but they corrected today, right? And I was sort of freaking out because I was like, then I was, of course, I was like double and triple checking my work. I'm like, what did I do wrong? And I was like, oh, I didn't do anything wrong. It probably just needed a slight correction because
Absolutely,
they're still incredibly profitable. They
absolutely.
still have
So,
an incredible cash flow.
so,
You
so
know,
let's,
there's
when I like to say, when in doubt, zoom out, right? So, here we are. You're calling a correction this? That's not a correction, my friend. Let's take just, and I say that, just respectively. Like, would you consider this tiny little thing a correction when you have this, right? So,
I don't
so
know. It's one of the few days I've noticed VLO's actually been down. So I was like, what am I getting wrong here? Like
Uh, well, I mean,
what mistake
and
did I
again,
make?
I think that this is a good time to reiterate the fact that, again, the markets move in ebbs and flows, and we haven't had a significant correction here, since this little gap down day way back, and that's not even this year. We're talking April of 2025. Okay, so even if and I should also say that it is possible to be. Whoa, it is possible for stocks to kind of go up for quite some time. That's what again, we account for that in the Elliott wave. That you can't, like Bitcoin, for example. Bitcoin's a great example of that. Typically, there is a healthy retracement, which would put us somewhere, to the 200s. So even if we saw that, I'd still consider this a buy. I still consider it bullish. So just because we
Mm-hmm.
have a day where we ended red, that's certainly not the end of the world. In fact, that's a normal market.
Yeah, yeah. Yeah. I seems like if my thesis was wrong, I had to like look into everything again. But it's like I look back into everything. It's like, man, they are still making a bunch of money,
No, no, no.
like cash flow positive, everything. Like they are
Yeah,
just raking it in.
they
So,
are really strong there. While we're at it, let's since we're on the oil route, you asked about BNO last time, and that's something I didn't really
mhm.
have an answer for you on. However, if we take a look at this here, we are still. I mean, I would be a strong buyer here at 47.78. It really depends on how long Trump can jawbone the markets, because if we look at what oil is doing now, um, I mean, we're at 90.54, which to me is just insane that it's been this low for this long. I think a healthy market would reflect something
Mhm.
somewhere up at least around highs here 108, 110, something like that. But we're down in the 90s, so um, and the reason why I bring that up is because if we go back to BNO here, oh, wait, sorry, I just changed it. If we go back to BNO here, can we get a better price here? Notice that it does not pay dividend. This would be something that I would be swing trading to try to get a really, really good price on, and kind of ride it up as oil peaks.
Here's my
And
thought, Danny. Yeah,
yeah.
here's my thought. BNO is like an ETF for Brent crude. Okay. Now, when you actually look at when the US is done with its SPR release, that date is July 9th.
Mhm.
So, what I'm looking at is basically BNO's price leading up to July 9th, because that's essentially going to be the deadline for when we're looking at crude shooting up,
Yep.
right? So what I'm looking at BNO for would be to say, buy between now and July 1st or something, and
Sure.
then
I
ride
think
it
that's
up
great. I think that
after
that's great.
July 9th, and then sell it, sell it when it
Correct,
2X's
correct.
or whatever.
Absolutely.
Right.
I'm just saying that technically I could see better prices out of this, but again, we have that timeline till July 9th. So, if you wanted to get in now, we're right about $50. I think that that's a bit aggressive. Probably 47.78 is something that we could hold off for, if not 43.88, somewhere, if it varies. But like I said, we have a timeline on this, so that's what's great, because a lot of times you're just kind of like holding and waiting. How long do I have to wait? And so like we actually have a deadline on this, which is good. Um, the
Right.
uh, the other one, pave. This is. Did you want to? Were any of these
Yeah,
oil?
I wanted to talk about FRODVN and FRVO real quick.
Okay.
FRO is they're a shipping company.
Oh.
It's like Frontline PLC. They ship crude oil. Now, the reason why I say this, they don't have any assets in the Middle East, in the Middle East region. Something I've been looking at for a while, and they recently started taking like a serious, like they started to sell off a bit, right?
Hmm.
Now, the reason why I say that is when you look at their overall core business model, is we're talking about extreme cash flows, and they're starting to charter with their Aframaxes between the Asian market and the Canadian.
Hmm.
So what I like about those infrastructure sheets that I showed you earlier is if you can not only own the asset itself in the stock valuation of the company that's upstream, but they have companies like Frontline have extremely high dividends as well. So it's
Hmm.
sort of like, as we talked about with EPD, and what was the other one? The
Mo, Altria Group.
no, not Altria Group. It's a pipeline company,
Oh,
Enbridge,
okay.
ENB. Uh, if you have both the midstreamers, that is the transports with the high dividends, and because we know if the energy sector is literally re-networking as we speak, which is what we're witnessing,
Hmm.
right? It's best to get in at the lowest possible prices you can for the upstream producers and the infrastructure that delivers.
Yeah,
You see what I'm
and
saying?
as you mentioned, we're
So,
we're above 5% here, so that would be a dividend king in by my book. Looking at this is a great example of an extended correction. Some call this an extended fifth because this fifth wave here it's like extended, but it's an extended corrective phase. So basically, again, looks a lot like that Elliott wave, right? Then we have a correction. We have an extended correction because we haven't really been able to kick off, or at least we might be in this first phase of the Elliott wave. But right around here, really great prices to get in. Strong support around 30, 34 by these green triangles here. 32, 38 would be a really good price. As we are hitting some resistance here at 35.60, we could reject down to 30 238, as I said, or 34. Those are good prices. And if this takes off with the fundamentals that Zach mentioned, 44.91 is a good target, or 39.70. That's highs. We're definitely going to hit that again. So if you're more conservative, you might want to take profits there. The other one that you mentioned, FRVO,
and
FRV.
DVN together, because they're sort of what I like. DVN has actually been kind of interesting because they merged with Cotera. But what's interesting about DVN
Ah, okay, so
is they
that's
have a
why I'm not.
partner.
Yeah,
They have a partnership. They have a partnership with FRVO.
okay.
Uh, and FRVO is actually a geothermal company that they're sort of like not a startup. They just recently IPO'd. I'm looking at getting in like right around $35. And don't get me wrong, I'm not saying that this is like a definite, like, gonna shoot to the moon
Sure.
or anything like that. But what I'm trying to say is, when I looked at the specifics of the company and the people behind it and the tech that they own, right? They're able to actually put in geothermal power plants using a lot of the fracking technology and a lot of the sort of horizontal drilling for hydrothermal capacity successfully,
Sure.
right? So what I'm trying to say is they actually sort of have they're the new kid on the block with respect to geothermal almost anywhere.
So this
Now, if
is
you look at what they partnered with DVN, right? Now, DVN we've talked about before, but what I like about the combination is part of the reason why
Devin.
DVN
Oops.
has been going lower recently is because a lot of the investors, it sort of scared them off that they bought large swaths of land from the government in Nevada, right? But what that's actually from is the reason why they bought those large swaths of land in Nevada is not just for oil drilling, but their partnership with FRVO, right?
Mhm.
They're looking at doing geothermal.
Yeah, so unfortunately, I can't. As you mentioned, FRVO has IPO'd recently. Unfortunately, as you saw, that there wasn't a lot to work with that chart.
Right.
But
Mm-hmm.
like I said, we did have that. I'll just pull it up again. We did have that little range forming, which is actually pretty healthy, right? So it's not tanking. It's just kind of wiggle waggling. We call this seeking value, trying to establish value, forming a range. Those are all terms for that. We have, between 43 and 30, 34, 50 ish. So yeah, right here we're about, about the middle. So you could see lower prices down here in the third, maybe if you're stingy, 35.50 is a pretty decent
Mm-hmm.
buy for that. Going back to Devon, Devon was one we've obviously looked at. As you see, we have the analysis drawn. Very strong level here at the 618 Fibonacci.
Right.
So we have very strong support there. And yeah, so this would be a good buying level. 4210 would also be a good buying level. Again, where this is another one where we're kind of in this extended corrective phase. Now, remember, I've noted this on previous stocks or assets in general, is that when you have this constriction of volatility coming from here to here to here, that's usually indicative of breakout. I'm not saying that that's going to happen. I'm just saying usually that's indicative because there's only so much you could squish that spring before, it
Mm-hmm.
pops.
Right. Right.
So definitely keep your eye on that one. I think we've gotten all of these except, and the reason why I wanted to stay within energy is I know Pave was a infrastructure, right? So we
Right.
want to take a look at that one. We're kind of shifting gears slightly here. So I like to lead this with a funny story, between us, where you told me this, that there was a bridge in Pittsburgh or in Pennsylvania somewhere that collapsed, and they're just like, fuck it. So we are in dire need of infrastructure because I was actually in Eastern Europe quite recently, and I was actually kind of flabbergasted to see that in some of the poorest countries of Eastern Europe, they have better roads than we do. Right here in
Mm-hmm.
Tampa, the one
Yep.
of the most auspicious cities in Florida, got better roads in like Croatia.
Yep. Hmm. Sadly.
Yeah.
Yeah, but that's the thing is like, but you and I, we were in Latin together.
Yep.
We were in Latin club together and everything. And man, the more and more I look at like the way things are put together now, and having been to Europe several times, like the more I really appreciate the Romans and their engineering.
So I
But they had it right, man. They had
so
solid infrastructure that's still standing today.
so
That's
to that effect,
absolutely amazing.
if you remember, my grandfather was in construction, so it's kind of something I take very seriously. And he didn't mess around when he gave quotes and he did work, right? And it just always amazed me that when I go to Europe and you see Roman ruins that are still standing, arguably even still functional, the aqueducts and stuff like that.
Hmm.
And then, if you remember, we did a crew competition in Biscayne Bay, and there was that old opera house that was like 30 years old, and it was in such bad condition that they condemned it. You remember
Hmm.
that? And
Yeah,
it's just
I
so
do.
flabbergasting to me that even after 30, like 30, like add two more zeros to that, and you have Roman stuff that's still not only up but arguably functional. So it's just absolutely flabbergasting.
Yeah, I would hope that look, we can a girl can only hope, right? That this time when we do finally invest in infrastructure,
It'll be
which
different
there's
this
some
time.
it'll be different this time, but one can only hope. But
But I mean, argue like, okay, so yes, we all have that hope, and yes, that would be the best. But at the end of the day, when infrastructure needs to happen, and you invest in certain companies to do so, certain ETFs, and again, I'm a longtime huge fan for those of you just tuning in or just new to the show. Big fan of ETFs, especially if you're trying to build those risk neutral portfolios. Why? Because they're a big bundle of companies that do a thing. I mean, that could be as specific as like pig farming, or it could be as broad as financial services, right? So in here, Zach has selected what I consider to be a good one. This is global U.S. infrastructure development, which it is sorely needed, and the performance of the ETF is indicative of that. I mean, look at this,
mhm.
up and to the right. So I still contend that we could see a little dip here, 54, 53.47. That would be healthy. Don't forget there are storms of brewing out there with stocks as a whole, which again could impact our selections just by nature of the beast, right? All stocks are
Right.
correlated to some extent. So if we get hammered here, you could see it in the 50s. Again, I'm a buyer, especially a buyer there, but looking for a retracement. 53.47 is something reasonable if you want to add this to your portfolio. Highs are almost certainly, especially with infrastructure spending, going to hit 58.36 again. Um, the next target being 61.84.
Right. Now, talking about, see, I would like to get in at pay probably a little lower, to be honest, because it's definitely needed and it may take off. But
But the timeline, like, what's the
but the
timeline on
but
that?
the but the timeline, right? Exactly. So, for instance, this definitely has a lot of room to still grow upward. Don't get me wrong. But if I can get in at a lower price, it'll just go that much
Like,
higher.
if you're
You know,
super, I mean, again, when in doubt, zoom out, right? So what I showed you, if we go here to the 30 minutes, it's like, okay, wow, that's pretty bullish. If we go here to the daily, you're like, whoa, okay. So
mhm.
now if we redo this on the daily, because remember Zach and I are more longer term focused, um, now we have some different numbers. Okay, so a 786, which is more than reasonable, would put us at 48.20. I would consider that a healthy retracement. I wouldn't. I would definitely put at least one order in at 48.20. Could go as low as 40. Basically $40 here,
Mhm.
based on the Fibonacci's and the Elliott wave here.
But you want to know my level of risk tolerance, Danny? There's only two companies that like the that they do have contracts and cash flow and everything else like that. But this is my view of like gambling. It's RCAT and FRVO. Those
Okay,
like my big those are my big bets. Just to give you an example as to my level of like sort of risk tolerance.
Sure, sure,
Is
and that's
that
perfectly okay. I mean, mine, I don't, haven't had one recently. Mine was on D-Wave. It's a quantum computing company, and that was when Jensen Huang was kind of jawboning against quantum, and because Nvidia's this and that. And it's just like, listen, man, like that just shows you don't understand because there are certain things that are just physically not possible between quantum and classical computing. It's
yeah,
just not
Jensen
possible,
Huang
right?
doesn't understand physics.
Correct, correct.
Jensen
So
Huang doesn't.
so
He doesn't know. Yeah,
that
he's
was
an
that was
idiot.
my that was my big bet for the year, and that was a three bagger. So I'm up
But
over
the
300% on that one.
one company I did want to talk about, we could talk about this next time because I mean it'll I have quite a bit on it. But an American company that I do really like that is splitting right now is Honeywell.
Okay.
And
Oh, nice.
Honeywell, yeah, Honeywell split off into aerospace and
So
into like regular domestic manufacturing stuff.
I-
But what's interesting about it is Honeywell did make a big bet. That's where I was texting you and I said we need to do one segment on why public institutions need to be the real centers of public investment for research and
absolutely, yeah,
development. And Honeywell is an example why.
sure.
Because they have developed a quantum computing method and hardware, which they own the patents for and everything,
Hmm.
and it works.
That's fantastic.
But yeah, but it's an enormous drain on profits. There's
Hmm.
no profit to be had in just what they spent so much money up front doing it, but they just and it does work. Like they've done it. But there's it's underpants gnomes.
Right,
It's
right.
just quantum computing crap. There's no profit.
Yeah,
Um,
I Honeywell
so
was one of my picks for other reasons. They also pay a really good dividend,
they
if I
do,
recall
right?
correctly. They pay okay, 2.16. That's not horrible. That's certainly good enough to catch my eye. And there are a couple other reasons I had this that are escaping me for the moment. It's just at in the 200s, I got to be really picky about where I buy this. You know what I mean? Because a retracement could really kick you in the
No,
pants
I'm
there.
holding off on Honeywell because it's look. I think they're going to sell off a lot more,
Correct, especially with the
like
markets.
in the
Yeah,
near term, right? But
correct.
it's definitely something to keep the eye on your eye on because if you're talking about a good company with good fundamentals and a really really solid like scientific industrial base that
Yep.
they have, that's a great company right there.
Yeah.
They have a lot of they have a lot of great assets and great scientists and engineers working for them. So
Yeah. So,
yep,
yeah, I think that about does it. We're kind of running on time anyway, but
yep.
uh, you know, I guess to close out again, to reiterate from before, you're not too late, right? If people are just tuning in, you are not too late. We're foreseeing significant market sell off ahead. This is just not alarmism. This is just nature, right? And we could be getting some better prices here. Be a buyer, not a seller. Okay, so be ready with whatever you could scrape together, and take a look at our picks. Look at my Fibonacci's and identify some good prices because there's a good chance you might get them. So
Not just
that's
that, Danny, but look at it this way. Say somebody even comes across this later on, okay? After the market sold off a bunch. The companies that we're talking about are like companies that are long term bullish with structural fundamentals and high cash flow, right?
yep.
With high dividends as well. These aren't like risky meme coin bets. These are
Correct.
like solid foundational
Yes, yes,
structural
exactly.
companies
These
with
aren't
high dividends,
hey,
right?
make 10% per month compounding. These are solid bets and these are companies that for the most part, but despite the one IPO have been around for a really long time
Mm-hmm.
and have a solid track record. So yeah, I guess we can close there.
All right. See you, Danny.
All right, take care.